Hello, PPR investors. My name is Jalen West, and I'm the Senior Marketing Manager here at PPR Capital Management. Today, I'm sitting down with Spencer Staples, our Chief Investment Officer. Last time we sat down was back in April, and we discussed the impact of rising tariffs and what that could possibly mean for our investors. Since then, the economic landscape has shifted quite a bit. We have new data to report on, policy moves, and what the dynamic looks like for the second half of the year. Today we're here to take a step back and take a look at what's stuck, and how we're positioning the portfolio going forward. Thank you for sitting down today, Spencer.
Jalen, thanks for having me. And as I say, it's always a pleasure to be here at our interview.
Yep, I think our investors are happy to have you too. We spoke back in April, like I mentioned. Tariffs were front and center. Since then, we've had a wave of economic events ranging from inflation pressures, shifting interest rate expectations. So, what developments over the past few months have surprised you?
It's been a dynamic period. I think we had a sense that it was going to be. What surprised me the most is the degree of uncertainty that is now manifest in economic activity and in the behavior of consumers and so on and so forth. I have not experienced this level of uncertainty in my career, and the level of uncertainty as measured by well-known indices is exceeding that which we saw during COVID, which is rather astonishing. And even exceeding the uncertainty that existed during the dramatic Great Recession.
Now, I think that it's shocking to me that the uncertainty is higher than COVID. I think that was the most uncertain time for pretty much everyone living today. What would you say is driving most of the uncertainty that we're seeing today?
We are living in a time where we do have a lot of profound changes that are happening. Tariffs, for example, we haven't really seen since the 1930s, and they're dramatic. I do think that they're going to end up at a lower effective tariff rate than maybe they seem to be heading towards when we last spoke. That's a good sign.
Yep.
There's geopolitical crises going on. We're in the midst of a major discussion over tax legislation, including extending the debt ceiling. And so it is a dynamic period, and therefore it's on one level not surprising that there's a lot of uncertainty around. It's just a level of uncertainty that's very unique.
Yeah, because it seems like it's record levels. And now, with all the uncertainty going on, many of our investors are closely watching interest rates, because obviously it drives a lot in this business. What would you say your outlook is for interest rates, going into the second half of the year?
If you looked at the correspondence between GDP and growth, recessions, interest rate changes by the central bank, there's a very familiar pattern that is followed when you have these periods of great uncertainty. It's often associated with declining economic activity, ultimately some rate cuts, often enough a recession. But I have to say, at this moment at PPR Capital, we're seeing growth slow, but we're not really seeing a deep recession or anything like that.
That's good to know. And with all the uncertainty going on that you mentioned there and the volatility, it leaves an opportunity for some potential softening in public equity markets and maybe even the real estate market. How are we positioning the portfolio today to navigate that?
I have learned over the years not to be attempt to be a forecaster for stock markets. With respect to real estate, it's at PPR Capital, steady as she goes. Our view is that the elevated uncertainty that we are experiencing right now will begin to dissipate. It's already dissipating with respect to uncertainty registered by survey data over tariffs. That peaked back in May. As we resolve our budget legislation, hopefully things will remain calm in the geopolitical context. And once we get past some other areas of volatility, like the impact of the tax legislation on certain demographics and so on and so forth, once that becomes more certain, we'll see the uncertainty index, if you will, decline, I think, regularly, gradually maybe, but regularly. And by the end of the year, I think we'll be back in a more normal environment.
Mm-hmm.
And I don't think anyone would suggest that making great changes is really justified at this time.
Mm-hmm.
We're continuing on our normal acquisition of assets when they meet our criteria and when we feel the opportunity is right.
Mm-hmm. So it sounds like we're obviously monitoring the data and monitoring the inputs that we're getting, but it's business as usual. So it's just business as usual.
Well said.
Yeah, and then I guess the Fed met about a week ago from when we're recording this. Was there anything from that announcement that stood out or surprised you at all?
I think that was the beauty of it, that it didn't surprise. It's not unreasonable to think that the central bank would also want to be kind of in a pause mode, steady as she goes at the moment, until they can get a little more clarity as well. I think that's coming.
Mm-hmm.
I think as we get into the fourth quarter, we're going to see that there's clarity over inflation and pricing. There's clarity over where the tax regime will be going forward. And therefore people can plan better. And once people start to be able to plan, they start acquiring cars, businesses, people start making capital spending decisions again, and we'll be back in a more normal environment.
Okay, so we're almost through. It seems like the bulk of the uncertainty.
We're passing through the eye of the storm.
All right. Now, as we look to the second half of the year, Spencer, what are one or two economic indicators that you look at as a fund manager, and one or two that our investors should look at, as they're allocating throughout the rest of the year?
We're looking at a large array of economic data. We regularly are forecasting economic data. But with respect to real estate, I would be looking at the sentiment series. An important survey was out very recently indicating that 70% of real estate professionals had experienced delays in projects due to, you guessed it,
Uncertainty.
economic uncertainty. As that uncertainty fades, those surveys, indices will start to increase in a more regular, predictable way.
Mm-hmm.
They have been coming up off lower levels, starting to break up to the upside. I think that will resume. So for real estate oriented investment, I've been looking at those survey numbers, looking for them to confirm that the environment is improving.
Mm-hmm. So once again, it sounds like it's more about keeping your eyes on all the data to see how it plays out over time.
That's right.
Well, thank you, Spencer. I think our investors will appreciate this.
My pleasure, and thanks again.
All right.